Wall Street cools on crypto-hoarding firms as US risk appetite plummets. A fresh wave of turbulence sweeping through global cryptocurrency market is placing mounting pressure on US-listed companies that aggressively accumulate digital assets on their balance sheet. These crypto-treasury on digital asset treasury firms, once celebrated for their bold speculative strategies, are now facing visible strain as investor appetite for high-risk assets diminishes. This downturn comes despite the crypto-friendly posture adopted by President Donald Trump, whose second term has emboldened digital asset enthusiasts and inspired dozens of corporations to emulate Michael Saylor's famed strategy experiment of holding Bitcoin as a primary reserve asset. The trend has surged earlier this year, driven by expectation of looser regulation and a seemingly insatiable institutional appetite for crypto exposure. But markets have turned cautious. Fears of an overheating artificial intelligence sector, coupled with uncertainty surrounding the Federal Reserve's path on rate cuts, have rattled risk-heavy segments of the market. Bitcoin has slipped to its lowest level since April, dragging with its equity valuation of companies whose balance sheet are tied to volatile tokens such as Bitcoin, Ether, and Solana. Data compiled by the block shows that at least 15 publicly traded Bitcoin treasury companies are now trading below the value of the token they hold, underscoring the severity of the correction. Analysts at Standard Chartered warn that DATs, collectively in possession of roughly 4% of all Bitcoin, 3.1% of Ether, and 0.8% of Solana, are becoming influential enough that their instability could reverberate through coin prices themselves. While executives at these firms argue that their long-term success depends on strategic disciplined accumulation, many are exploring alternative income model to offset token price volatility. Below is a closer look at how different categories of DAT companies are navigating this storm. Bitcoin-focused DATs, by far the most established and widely imitated, have endured a sharp pullback. Shares of Strategy, the bellwether of corporate Bitcoin accumulation, have plunged nearly 36% in November alone, representing one of the steepest monthly decline in the company's history. Analysts attribute this correction to a saturated landscape. Dozens of smaller firms have copied Strategy's model, diluting the scarcity premium once associated with corporate Bitcoin ownership. Some firms have expanded beyond mainstream token, venturing into volatile altcoins such as Solana and XRP. This quest for higher return, however, exposes investors to extreme price swings. On one example of a Alt 5 Sigma, which has gained attention for adding World Liberty Financial, the Trump family's own crypto project, to its balance sheet. While such moves generate headlines, analysts warn that holding thinly traded altcoins can amplify balance sheet volatility and heighten seismic risk with the DAT sector.